Alrighty, what is going on YouTube? Welcome back to a brand new review. Today I'll be going over how I'm up a little bit over $32,000 on the trading day. A pretty successful day. Compared to yesterday, it was a lot easier. If you haven't watched yesterday's review, go ahead and watch it. But I ended up streaming for about 6 hours yesterday and made about a third of the money. Today, ended up streaming for about 3 times less in terms of duration, and we were collectively as a community able to make about 3 times as much. So that's trading. That's gonna happen. That's how it is, right? You have to remember, guys, you don't get paid off your hard work in trading, right? Mainly, you get paid off your smart work. The risk manager you are and the decision maker that you are, those two things specifically determines the outcome of how your P&L looks like. So for me specifically, coming into the day, starting off through Asia, I took a trade where we ended up taking a long off of 5-minute gap rebalance and a 15-minute gap rebalance. Here's the trade, right? You have your 5-minute gap here, and then you have, ooh, I was not sharing my screen. One sec, chat. There you go. So you have your 15-minute gap here, and then you also have your 5-minute gap here, right, where we see price essentially tap and rebalance, then go. Then you see price kind of build back up, and on the move back up through confirmation, you see me take this trade. Here's my executions through my Lucid accounts. I'm able to show this now because I'm recording this review before the trading day is over in Asia. The next day has began. I usually record these reviews like the night of the trading day, which kind of, gets rid of these executions. But yeah, you see it today. We see price essentially, move up. We take confirmation off the 5-minute time frame. There's our entry. And then we see price essentially come back up here. We see price look for continuation. And once we see price displace enough, I go break even on this trade. And so for the take profit target in mind for this trade was a monthly high, right? If we go to the hourly time frame, we could see the significance of this high right here. That was my take profit goal on the higher time frame look of price. And so yeah, again, my thesis coming into this trade was the fact that we ended up seeing price essentially move very bullish off New York, seek a retrace during power hour, and then you see Asia essentially continue and build off what New York had done, which is look for higher expansion. And so for me, with that combination of price obviously being bullish and seeing these monthly highs wide open, I felt taking a trade through an entry model would have made sense. We waited for a retrace, we got this candle. However, price was so bullish to the point where price clearly did not want to retrace into lower draw, as we discussed, I believe, in yesterday's trade. Sometimes, chat, you have to recognize when price is very bullish and it has clear draw that it wants to trade into right now, and you identify that through price and how, the momentum and the speed of price is. When you see price as bullish as it is, don't expect a whole 50% discount move. Don't expect such an aggressive move. For me specifically, waited for a healthy retest off this 5-minute, 15-minute gap, saw the entry points of both, took the trade off confirmation, and boom, we eventually go break even. We see this trade kind of consolidate here. We then come up here and we see price tease, take profit by 2 points. 2 points, right? The high of this candle right here was around 42. The height of this TP was 45. So 2 points on the NASDAQ is how close we were to hitting take profit. Unfortunately, we do go break even on this trade, which is something where most people, if they were to see a realization like this, where you're in the money pretty much the whole entire night, and then you actually end up realizing a break even because of the fact that our trade did not hit TP, they would go on tilt. They would be very frustrated. They would really want to enter immediately back in and make the money back, revenge trade, etc. Even off a break even. I know tons of traders that have done that. I've done that myself when I first started trading as well. So we see price kind of build up here. Again, 2 points away from TP, come back down, hit break even. And the reason I'm kind of including this trade, which is a break even trade, is because I want to kind of more so go over the fact of the importance of psychology. Again, a pro trader here, what they do here, as opposed to an amateur trader, a pro trader, we look at this trade here, right? We see what happens. Okay, we're break even. It's a bit of it still stings a little bit, right? Your emotions never fully go away, but we let it pass. We don't get greedy. We don't revenge trade. We don't do all these different things. We simply look at price for how it is, take it for what it is, and simply move on. So then you see me coming into New York Open. We take our next trade. You don't see me have any of those emotions tied up. I simply go back to our system, to our model, and we simply look for another trade. That's it. So that's the importance I kind of want to get out with here is, how many times have you guys been in a trade like this where you see it go, tease, take profit by the slightest, 2 points on NQ here, come back down, go break even? It's happened a lot of times to me, right? Over the course of years, it's happened several times. But what's important between me now and me back then is I would tilt back then. I would lose so much of my progress made throughout weeks and months just because my take profit didn't hit by 2 points, for example, here. So I want to make sure you guys know that it's okay. Trades like this still happen to me. It happens to everybody. Again, the difference between a pro and an amateur, a pro moves on and accepts it. Amateur, they tilt. So choose your side. In terms of New York's trade here coming into the open, we ended up seeing a retracement into London lows here where we saw price essentially take out the sell side liquidity. Then we see price essentially come back down here and tap an hourly gap on NQ and also fulfill an hourly gap right above it as well. So we have an hourly gap tap here and also an hourly gap tap on NQ here. And then for ES specifically, we have we fulfilled an hourly gap fill perfectly, right? So we had an hourly gap here on ES where we had this fill come down and tap perfectly. Our low of day on NQ as of right now is fulfilled or put in because of this hourly gap tap. So for me, coming into the open, I was a bit more neutral. I was leaning bullish naturally because I'd taken the Asia trade, and the fact that price still left in those monthly highs, and the fact that price through higher time frame was bullish overall. Price came down here on ES, rebounced off this hourly gap. Then we saw a tremendous move off the low. And so for me, I was looking for a market structure shift trade here. What we then see price do, right, after putting in a good low and seeking that sweep, off the London lows back up, what I wanted to see here was displace. As we always talk about in the community, displacement is key. And we see price essentially put in a low off an hourly low on NQ and ES, where we see both indexes really rebalance. But that's not just it, right? It's also price. It's a combination of both, but with the lows and the type of move that we get off the low. We see price here displace back up off the 5, off the 1 minute time frame in a sequence where you're seeing the buy sequence back up match the sell sequence, if that makes sense. So on the way back up, we're seeing price void and invalidate these bearish PD arrays as quickly as we created them, right? So that's what's key. We see price move up here and we see price shift back up. So not only were we putting in a good low, which we don't want to take a trade or a market structure shift trade if there's a randomized low. You always want a good decisive low, like an hourly gap rebalance here. But you also want to see price showcase interest in price action with speed and momentum by delivering and coming back up as aggressively as it sold down, if that makes sense. That's more so it. So we kind of look at it. This is the Asia trade, by the way. I'm long, blah, blah, blah. This is this. Trade eventually goes break even. You then see me mention the idea, potential inversion idea for long. This is the ideology behind this trade. It was a 5-minute inversion fair value gap, go invert. Lanto, why go here? This 5-minute gap here was the only clear 5-minute gap in range, in my opinion. Not in my opinion, factually. This is the only clear and somewhat displacive gap off the 5-minute time frame where I feel like we can operate and take a trade-off. We did have a couple of rays off the 1 minute time frame, but obviously for me, a 5-minute gap overrides a 1 minute gap. We still utilize the same 1 minute confirmation, right? And so we end up taking this trade here. Confirmation comes into play at 9:50 a.m. Eastern Standard Time. Our stop loss was this relative low, aka this higher low, aka this wick low, this 1 minute wick low. We see price come down. We see price come down here. With this low. I felt this was an appropriate stop. Yes, we could have used this stop right here, but I feel like price did not need that for here. I felt, whenever it comes to market structure shift plays, we're not looking for continuation. We're simply looking for reversal. So for me, I like a quicker invalidation point because I feel if price were to come down here and take this low out, we were going to see this low here as well. We did not. We saw price come in, we took entry, and we immediately went in profit off this trade here, where we then held. In terms of our break even for this trade, we kept it a 1 minute internal high. Lanto, why keep this break even? Why keep the break even here? Well, it's a combination of your internal high, right here, this 1 minute internal high, wick high, but it's also a combination with the fact that ES was the leading asset. Here's another question. Lanto, why not take ES here? If you know that ES is leading, more bullish, why not take ES? Well, that's because ES had no entry. This is a key thing I always want to mention. I'm a big fan and always a big fan of divergence and making sure you take the right asset. If we're bullish here, ES ideally is the asset we take at that point in time. But for me specifically, I still took on NQ because it was not like the divergence was massive. It wasn't like ES was bullish, NQ was bearish. It was that NQ was slightly trailing or weaker in terms of in comparison to ES, because we were seeing ES engulf back up and trade into its overnight highs a lot quicker and a lot sooner than NQ was, right? So yeah, that's what I want to get away with this is if you see the divergence be so wide to the point where ES, for example, here is very bullish and NQ is just bearish, you don't take the trade here, right? You don't take the trade on NQ, but being that it was equal, I felt it was fair to still take the trade on NQ. And yeah, so we take the trade. And in terms of this break-even point here specifically, we go break-even off this internal high. And part of it as well is because I wanted to go break-even once ES ran London highs. At this point in time, ES was still the leading asset. So I felt ES coming up here taking London highs. In the case I wanted to see pivot or move back down into range, which it could have easily done, I wanted to go break even here, and that's exactly what we did. Saw a very healthy move back up. We avoided that internal high, went break even. Then we eventually hit take profit 1 on this trade, which realized, I believe, for about a 1.3, 1.4 R. So beautiful entry, a beautiful trade. Here is the execution on this trade. Go to the 1 minute time frame. And again, chat, this was done all live with my people. And there should be a short coming out soon to kind of talk about that. But here is your entry, right? Here is your take profit 1, being a London high. And then here is where we end up getting trailed out at the rest of the last 2 contracts per position. So I took 5 MNQ on this trade per account. And we ended up realizing 3 here, right? As you could see, realizing 3. And then we ended up realizing another 2, or the final 2 here on this trade. So there it is. That's pretty much it. We ended up seeing price shoot past TP1. We then eventually ended up trailing stops as we kept on creating these higher lows and trading higher draw. Every time we would put a new high, we just simply trail, as you guys could see, right? Boom. I have break-even stops. We mentioned that. And then here is our take profit. Boom. Beautiful trade. We then see me mention the ideology behind trailing stops. And eventually you see me post my execution. This was all done live and executed very well. So yeah, stellar day. Here are the stats for the Lucid accounts off the 4 days that we traded them so far. This is the result P&L. And today, obviously the biggest day yet off 1 hour risk. And you go back to yesterday's review, we literally talked about this. We're like, yeah, expect a higher or lower or more volatile fluctuation in P&L today because we are 1 hour risk. And boom, we got it, right? Biggest day by far today. So yeah, that's pretty much it. That's the review. And if you're wondering, obviously, how I made 32K, I just simply copy traded this exact trade on my other accounts, which have more capital in result, which means I can risk more, resulting in bigger P&L. So with that being said, hope you guys enjoyed it. I'm going to catch you guys in the next one. Peace out, y'all.